Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're going to be talking about KT Corp or KT Corp. I'll get that correct. All right. The reason why that I selected KT Corp is because we've been talking about international investing in recent days. Yesterday, we talked about investing in China Mobile. And one of you brought up the question of what would happen or what's going to happen with tariffs. What if Chinese companies are inhibited or prohibited, or there's some restriction on trading Chinese stocks in the United States? What about it then? Well, so far that really hasn't happened. There have been some executive orders which have put restrictions in place, but there's not been any type of blanket ban on trading Chinese stocks in the United States. So we're okay for that. We don't know how that's going to work out going forward. But there are other opportunities that are outside of the United States. And those of you who listen to me from around the world, you know that. So today I picked a stock that piggybacks off of China Mobile, and it's called KT Corp. There are really three companies in South Korea that focus on the wireless business, and KT Corp is one of the significant ones. So let's go ahead today and get into the daily stock analysis. All right, I want to remind you that if you really like the information that you're hearing today, go over and hit the subscribe button. Follow me mainly on YouTube. I know that I stream also on Facebook and on Twitter, and I post over on MeWe and Parler, but come on back over to YouTube because that's the most active platform. That's where most of you are listening, and that's where most of the interaction is going on. Some of you are posting some great comments, and I love your questions, and I like it that I think that you are actually learning from each other because you're reading each other's comments. That's wonderful. I love to be able to help you learn more about investing and help you understand how to build your finances. That's really what I do. I'm a financial planner. In the mornings, I work with my clients. In the afternoons, I work for you, and I put together information on different stocks as we're going to cover today. If you have a question, if you're in Texas, that's my service area. If you're in Texas and you'd like to learn more about my financial planning services, or if you're just curious about what else I do, go over to richardsfinancialplanning.com and you can learn a little bit more about that. Let's look and see what's been happening on this stock that was actually up a little bit today. If I can get the right button going on here. Now, KT Corporation is not quite as big as some of the other companies that we've talked about. Like yesterday when we were talking about China Mobile, KT Corp is a dwarf in comparison, but it's the service area that is really the emphasis here and the profitability. And unless you've got billions to invest and really influence the market in that direction, if you're investing a few thousand or several hundred thousand or even million, this is the direction to look if you're trying to diversify. And I think that KT Corp is going to be a good avenue for to look at. Let's go ahead and unpack this just a little bit and see what's going to go on with this company, because every day when I talk about stocks, I talk about three particular things. I talk about the stability of the stocks, the earnings of the stocks, and the competitiveness. So we also look at a term called a moat. And this is really what a moat is for you who are not familiar with it. Okay, sometimes I'm supposed to have a touch screen that when I touch it, it goes, and it didn't happen that time. But now you know what a moat is. A moat is that invisible barrier that is between the company and their competitors. And when you look at KT Corp, this is what the moat is. The fact that they have an established business model and they have fixed line infrastructure. Now, I mentioned at the very beginning of the video that there's really only 3 companies that are in the wireless business in South Korea. And we're going to talk a little bit more about those in just a moment. There's been other companies that have been, the government has tried to entice other companies, even from outside of South Korea, to come in and do business, but there really hasn't been any takers from that standpoint. But when we're looking at this particular company, what we want to do is look a little bit more at the total revenue. We're going to look at the total picture, and then we're going to unpack it just a little bit and look at the divisions. There's really 4 divisions within the company. The total revenue year over year was off 3.4%. And in light of the coronavirus pandemic throughout the world, that's really not that big of a drop. The net income is up 7.9%, and the operating income is down 6.4%. Now, I mentioned before that there's really 4 main subsidiaries inside of KT Corp. They have their major subsidiaries, and these are businesses actually which are not in the telecom business. And when we talk in a few moments about the bulls and the bears and what they're saying about this particular company, the fact that KT Corp is going outside of the telecom business really weighs on its ability to carve a niche for itself to keep competitors away. So they do have a large amount of money which is in other businesses. Their wireless business is really 34% of their operations. Their fixed line and IPTV is 26%. Then their other business-to-business operations, they have different cloud services and other different businesses that are operating are 14 and 26% respectively. Now, when we look at what has happened with those businesses over the past year, the revenues, the 34% of revenues that came from the wireless business was really up 0.6%. And then we move on to the second part, the fixed line and the IPTV, that represents 26% of the total revenues. That was also up just a hair at 0.6%. Now, when we look at the third one, this is the business-to-business infrastructure that is existing within the company, and it represents 14% of total revenues with the company. It was up close to 1% at 0.8%. And then the last subsidiary, this actually includes even real estate and some other businesses, that's 26% of total revenues. Now, there's really 2 major areas to look at here when we're looking at other businesses. They have business card and KT Estates revenue, and I believe that's actually real estate, which is within the company itself. And that was actually down 0.6% and down 39.4% respectively. And if we're talking about real estate, the fact that the pandemic was causing a lot of problems and havoc in the economy, that's reasonable that that aspect of their business was down. Now, the other part of the other businesses that was actually up was their digital ad and T-commerce content subsidiaries. It was up actually 8.6%. Now, here's one of the best things about KT Corp. It's this. Yes, dividends are awesome. If you are a person that's looking to collect income from your investments, if you're retired or if you're just looking basically to let your money gather as far as value based on dividends, this is a good one, 4.21%. Now, when we look at what's happened over the past years, what I did is I'm showing you a chart of the different dividends as it's progressed. Now, the spinning circle that you see that's on there, that's where we are right now at 4.21%. Last year, they were at 3.83, and you can see that it's progressed from 2013, where it was actually only 2.59. So they've actually increased pretty good over the past years in itself. Now, here's one big thing that's hit the news recently with KT Corp, and that is that they are building, and they have built an infrastructure data center in Seoul that will be a premier center for developing their company going forward. When we look at the company itself, about 20% of the users utilize 5G, and that's a big deal. We talk about here in the United States using 5G, and there's a lot of companies it's still rolling out. Apple has 5G capable phones, but there are a lot of networks that are not available yet. And actually in South Korea, KT Corp has one of the largest active networks in the world. Now, that's a big advantage to this company going forward. They also, the bullish analysts that are looking into this particular company are also looking at the fact that they do have good cash flow currently. In past years, 2011, 2012, 2013, they had some issues, but they fixed that. They have good capital expenditure management. And they also have something very different that is working in their advantage in South Korea, and it's called the Handset Distribution Act. Now, I have to read this off here because this is not something that we have in the United States. It is an act that is in place in South Korea that prevents telecom companies and handset makers from providing illegal subsidies. They're trying to make the playing field level for different companies, and that makes a big advantage. If there was one of the competitors, whether it would be LG or SK, one of the other competitors, they can't really have subsidies that are legally being given to customers to entice them and pull business away from each other. Now, what are the bearish analysts saying? This is where we are with that. Fixed line revenue in South Korea is actually decreasing. And that's a pretty high margin business. And as that decreases, the bearish analysts are saying going forward, we're probably, or KT Corp will probably not be able to replace that level of margin on new business. Now, non-telecom businesses actually dilute the competitiveness of the company. Now, you know, when I mentioned the 4 different major subsidiaries, you notice that there was a pretty big chunk of the company that is actually not even in the telecom business. So as they go into other areas, it's possible that it could reduce their competitiveness, and that could affect share prices going forward. Another problem that can crop up is the fact that the South Korean government does have a tendency to favor offering telephones to low-income individuals, which is not really, it's not a problem. But when we're looking at a business and we're trying to be competitive, it can be a problem. So the profits, it will cut in severely into profits going forward if they're not able to set a market standard and they're actually forced into pricing structures. Now, when we look at what different analysts are saying, I always go back to Morningstar, because Morningstar is the premier research house here in the United States. And I think that they have a very conservative reputation. And this is what they are saying about the price of KT Corp. With the current price at $10.61, they're actually pegging the fair market value at $16.15. Now, wait until just a moment. At the very end, I'm going to talk to you about what the analysts at JP Morgan are saying also. But as we look at what the fair price history has been, this will show you over the past years back from 2010. It's a graph that you can get an idea, get a feeling for how the fair price and the actual price have run together. The fair value is in red. The closing values is the candlestick that you'll see here. And actually, as far as an analyst point of view from Morningstar, it's always run underneath what they think their fair market value is. Unlike when you look at a company like a Tesla or Apple that's running far above what their fair market value is, you'll see that a company like KT Corp is actually running underneath what its value is. But when you compare the breadth of the difference between the actual price and the fair market value, you'll see that we are at one of the lowest points right now. And that could play to the advantage of those of you who are wanting to invest in this stock now. Now, there's not a lot of analysts that are covering this. This service that I utilize only shows 2. And out of those 2, guess what? It's a buy. So they're saying that this stock is actually in a good situation and it's at a good level. Now, how does it compete? Remember, when we look at different stocks, we look at those 3 things. We look at the SEC, we look at the stability, we looked at the earnings, and now we're looking at the competitiveness. The C, the competitiveness. What other companies are out there? Well, there's really 3 in South Korea. There's KT Corp, there's SK Telecom, and there's LG. But LG, unless the company, the actual company that does the telecom business in South Korea, you can only buy on the South Korean market. You can't really buy it here in the United States. The LG corporation that you buy here is different. That's why I really didn't put it up there, because they do a lot of other things, everything from washers and dryers to notebook computers. It's a lot more than just a wireless company as doing business here in the United States. So what other companies can we compare it to? Now, since yesterday we were talking about China Mobile, I thought it'd be a pretty good idea to put China Mobile in there, and you can see how it compares. And then also let's go back to a homegrown company, AT&T, and put that in there too. So when we look at KT Corp on the spaghetti graph is going to be in blue. SK Telecom is going to be in red, and they have actually over the past 12 months have excelled over top of any of the really companies that we're talking about, even AT&T, which is actually at the bottom of the heap when we look at all of them. So one of the things I do want to point out, though, is for the gentleman that asked me about the tariffs yesterday. I really think that the tariffs will affect the price more from a anticipation standpoint. Remember, the way that stocks work, the way that the stock market works is the price moves in anticipation of what is expected to happen, even if it hasn't happened. So when the Trump administration comes out and says that they're going to have tariffs on companies that are tied to the Chinese military, like China Mobile, which is actually, whether it's tied to it or not, the fact is it's actually controlled by the Chinese government, as is the military. So when they put one and one together, they come up with two. And you'll see right here on the spaghetti graph, if you follow the dancing cursor, this is where the announcement happened, and this is what happened to the price. Okay, you can also see on China Mobile, actually on, let's see, which one is this? SK Telecom, which was the highest one, and also KT Corp. They're moving pretty much together as far as direction. They did not move anything close to the way that China Mobile did. So these two companies are doing pretty good. And actually, if you were going to be looking to build up a portfolio, I think that one of the best things that you can do is diversify. If you like mobile companies and you think that it's something that you want to put into your portfolio, think about buying more than one. You might want to put SK Telecom and you might want to put KT Corp in there too. You might even be brave and think, I want to put in China Mobile, because I know there are some of you that have written into me that say, hey, I like this stock. I've actually wrote it down. I think it's got a lot of potential going forward. So what I did again is I'm showing you a model that I use when I'm talking to a client about trying to reduce risk. Now, yes, it does include bonds, and that might not be the thing that a lot of you like or all of you like. Some of you may think, yeah, I do need to have some conservative investments in my portfolio, and I need some small stocks, and I need some international developed stocks. And that's really where KT Corp and SK Telecom and even China Mobile would come into play. In this portfolio model, it represents about 10% of the assets. Now, remember, if you work with an advisor or you work with a custodian that allows you to have partial shares, you don't have to buy the full share. So it's really easy to put in the percent and say, okay, if I've got 1,000, 10,000, 100,000, $1 million, whatever the case is going to be, you can take the percentage and allocate it towards particular stocks. So hopefully that helps give you just a little bit more information on allocations. So let's take a look and see what this stock has actually done over the past year. A year ago, it closed at 11.15 and a little bit more. Today, it closed at 10.61. So over the whole year, it's actually down 4.87%. Let's hope the past performance is not an indication of future results. Let's hope it's better. Over the 3-year time period, we've got kind of the same story going on, but it's emphasized more. 3 years ago in 2017, the stock was trading at 12.82 and a little bit more. It's down 17.25% in the past 3 years, and that's an APR loss of 6.12. APR is annual percentage rate. And again, let's hope past performance not indicative of future results, but that means really you can't bank on any of this stuff. All right, let's move on just a little bit, because as we move into this, a lot of times when I get to this point in the review, I'll bring up what all the different analysts have said, and there's not a lot out there to really pull out of from that standpoint. So I wanted to go back to this Barron's article, which is actually showing that there's a possibility going forward. Now, you got to also understand that this article is a little bit old. It's actually from 2017. But when we look at what the possibilities are going forward, this is really what we're looking at. Okay, so hopefully that gives you a little bit of an understanding of the stability, the earnings, and the competitiveness. And I wish that I could have had a little bit more current information on ST Corp as far as analysts go. But really, most of the research that I gave to you today, I spent the morning and the afternoon doing that myself, because there's not a lot out there. So when there's not a lot out there, I have to go and dig through the company's websites and read and do the research for you, which I'm really happy to be able to do. I hope that you gather something from this information. And if you do, please subscribe. I like to hear from you all. Let me know what your thoughts are. Is there a company out there that you would like to hear about? And I know there's some of you that have written in and I haven't responded to you yet. I apologize. I can't get back to everybody. The more people that follow me, I love it, but I can't respond to everybody. But please keep writing in. I'll be glad to take some time as I go through all this and look at the different stocks that you have an interest in. And if I've got enough research information, I will do a review for you. I hope that you've gotten something from today. I hope you've got great plans for the weekend, that you stay safe from the coronavirus, and you come back and watch next week. So without further delay, I'm going to go ahead and end it and show you my disclosure, which is real important, and bid you adieu and have a good weekend.